What's up, investors? Ken here from Dyslexic Investor. We're going to be looking at an overall market state and how S&P 500 is doing, how different various sectors from financing, energy, real estate, technology, all those various components are dealing with the all-time highs that we just hit at today on the SPY at $312.69. Again, this is all-time high. This is a weekly chart, so each of these bars are a week. We can zoom out even more. This is a 1 month, 15 years. This is 0809 right here, that kabobbles of crashes and booms and cracks and bangs. And then you just have the whole, doing air quotes, uprise from that low of 67 and 10 cents. All the way up where we are now. That's been a heck of a ride, hasn't it? So where do we sit today? How are things looking? Different various things. So I do this periodically. So I'm going to try to do this each and every month for this channel. I'm going to do like a monthly update, probably in the middle of the month, some things like that. Sometimes the end of the month. Since Thanksgiving is coming up and things are going to get a little busy around here, we're just going to be doing it today. I think today's a great day because we hit an all-time high to kind of show you relative strength to other various sectors. So again, it's 11/19/2019 here in beautiful November. Alright, so looking at this is again all-time high. We've had this little double top here. We broke through it towards the end of October, and we've been pushing higher. This is with some resolution of the trade war, if that's ever going to happen, in different various disputes where now people are saying we're not heading to recession, or we pushed it off, or GDP growth is back up, blah, blah, blah. So what do I look at? So S&P 500 is built upon multiple little subsections within the company, within the index. So SPY is broken up into like 11-ish pieces, and there's a great little website that I use. I'm going to pull it up here, right here. Boop. So this is just the sectorspiders.com, and you can go down to all the ETFs they have here. And by clicking on what they do, what's their holdings, and all various different things. What I like to do is hit the Tools tab, and I go to the sector heat map. And this tells you, again, these blocks are different because it just shows the weight of the position. So technology is 23%, healthcare is 14%, discretionary is 10%, financials 13%, communications 10%, energy is about 4%, real estate's 3%, utilities is 3%, materials is 3%, industries 9% and 7%. So that component will equal 100. So that being said, you can kind of see here, this is year to date. Everything's up, right? Like it's fantastic. You definitely see some laggers. Energy definitely not performing well at all. And we've had some holdings in energy, hoping for a comeback. Healthcare's kind of been sluggish, but it's been picking up substantially, and technology has just been flying to the moon, along with financials as well. And communications, which is kind of the new section they added maybe a year or so ago, that is kind of part of the technology realm, which once we dive into the different indexes, we'll look at back and forth. So what we're going to be doing, we're going to be looking at the sector overview here. Once this little tool loads, we're going to go back to year to date. Again, you see everything going pretty high, and so we're just going to start going down this list by looking at each chart and what their holdings are. Alright, so I have them wonderfully listed here. So we're going to look at XLC. It's sticking with the market trend. It's hitting at all-time highs. And what is made up of XLC? Biggest holdings: Facebook, Alphabet, Charter, Walt Disney, Netflix, AT&T, Verizon, Comcast, Activision, Blizzard. So these stocks are weighted within the portfolio. You can kind of see here, biggest position is Facebook at 20. So literally this is the top 3. So it's Google and Facebook basically. So between, they have about 23% in Alphabet and 20 in Facebook. So you're looking at nearly half of the weight of XLC is in Google and Facebook. So let's just pull up Facebook. Facebook actually was one of my recommendations I would like to see and buy. This has not been performing to the of making new times highs. That's due to a lot of different various regulations and stuff like that they're having issues with, and just constantly be called to DC to for inquiries and so forth. And then Google kind of had a small sell-off, but they had an all-time high. Great performing. It's kind of performing with XLC. Next, we're going to be looking at XLY. Excuse me. So this is a consumer discretionary. So this is basically, you have excess money at the end of the month or the end of the paycheck. What do you spend your money on? Probably Amazon, Home Depot, Mickey D's, Nike, Starbucks, Lowe's, Booking, TJX, Target, those various guys you're going to be spending your money at. Again, look at the biggest holding is Amazon and Home Depot. Huge positions. Home Depot actually reported today, so we're going to look at XLY. All right, there we go. Hasn't been the most outperforming. This is kind of consistent with basically a move into a wedge, which we can kind of see that forming here. So it's consolidating here. So we want to kind of continue to have this trading in and around this range, and depending on which it gets closer to, it could potentially break out to all-time highs. I feel like you definitely, these are just very sketchy lines here. There was a little more precise. I'm sorry, I have a cold too. So this is a very wedgy pattern. So then we said HD is one of the bigger holdings. They didn't report very well. Like they're down $13, nearly 6% today on bad earnings. But I have a really good feeling, and looking at potentially other earnings they had, they usually come back from that. And then we had Amazon. They've been kind of lackluster as well. But again, the holiday season is coming up. Biggest time of the year for them, so I'm really looking forward to see what they bring to the table. Alright, so now we're going to look at XLP, which is like consumer staples. This are something that individuals will need no matter what. This is your deodorant, this is your toilet paper, this is your staples in your house that you need to provide the basic necessities of surviving. Which I don't know if you need Philip Morris, which is cigarettes, which that should probably, I don't know how that's still in there. This is your toothpaste, your Walgreens, all that fun stuff. Again, P&G, the biggest holding, and Coca-Cola with Pepsi. Coke's better, right? And then we're going to be looking at XLP here. So let's pull up XL. Oops. If I click on it, XLP. This might be a little bit of a long-winded video, if I apologize. So this is the daily chart. We're going to look at weekly because it's more longer terms. Hitting an all-time high in the last 3 years. Again, the low of the following year due to that fears of recession. But usually this is a good indicator of a recession coming, because everyone's going to need their toilet paper, they're going to need their tissues, they're going to need their medicine, their band-aids, their toothpaste, and so forth. So this is a pretty good indicator. It's been kind of steadily grinding, kind of, not want to say slowing down, but looking at consolidating here. It's still very going, it's going up and to the right there, so that's always good, right? Very interesting pattern. So you can kind of see that with Procter & Gamble PG here. Yeah, going up. This was a pick a ways back before I was making the YouTube videos that I bought into. It's got a nice little dividend and stuff like that, and it's just consolidating up here, which is kind of showing more on this than it was in the sector. So this could potentially go kind of level off, go higher, but again, we'll wait and see, right? And then we're going to go to the One of the worst performers with the SPY indexes, which is energy. So you're looking at your Exxons, your Chevrons, your Phillips, Schlumberger, EOG. These are all your Kinder Morgan. These are your pipeline people who run the oil, people who extract oil, people who refine oils like Schlumberger. This is slowing down because of renewable energies. So we do XLE. This is over a week. I mean, this is over 3 years, and each of these are a week. You kind of see that I had a position in this, and I got out at $73. And it's just been going down ever since then. It has not been able to recover. Even on the weekly chart, not even getting above the 200, which is slightly worrisome there. Again, on the daily chart, well below the 200-day, having a lot of issues trying to even break through that. That's we've been within April, and looking to go lower due to this movement here today. So this will be something I would be looking at actually short if you're into that. Next, we have another very well run is the XLF. These are the banks. Your JP Morgans, Bank of America, Wells, Citigroup, American Express, Goldman Sachs. These are the guys that ruined the financial crisis. I mean, yeah. So we're going to do XLF. They're performing, hitting near all-time highs, kind of hitting a double top here. Again, this is just flattening out. This could, depending, keep an eye on the moving averages and seeing how it goes. But on a weekly chart, this is a pretty strong breakout, slowly leveling off, potential to kind of pull back a little bit but continue going higher. There is no signs of this really slowing down. Interest rates are still low. A lot of people are still getting loans and stuff like that in mortgages, so it's been pretty good for the financing market. Okay, now we're going to do XLV. So these are your healthcare stocks, your J&J, United Healthcare Group, some pharmaceutical companies, Allergan, AbbVie, CVS, so forth. So XLV. Again, on a weekly chart here, all-time highs. Fantastic. These guys have been in a rut for some time, basically between 90 and 80, bouncing in and around for the last 2.5 years or so. Had a nice little run up here. This is kind of worrisome due to a lot of the political turmoil on if we're going to go to a single payer, or if we're going to get rid of these private companies and switch to government-sourced collateral for healthcare and things like that. This is potentially good depending on which way you're looking at, but we were just looking at straight in the chart. Wouldn't be buying it up here. This is too much of a movement high. It is considered a breakout from these 2 points here. It's broken out, closed above it, and looking to consolidate and potentially go higher. Gonna drink of water real fast. H2O. Sponsored by H2O. Free water from the fridge. Anyways, we got XLI. So this is a sector that, excuse me, looking at like industries. So this is your, which everyone knows about, BA, Boeing issues with the airliners, your Honeywell, Union Pacific. These are the big titans within that actually create the different various things, from moving things from point A to point B. They kind of are the gears within the economic cog, as you may call it. So we're going to look at XLI. XLI, boom. Kind of performing very well, like the other markets, completely opposite of what the energy sector is doing, of looking at something that could be leveling off here. It's again another breakout here from these two highs here. Breaking out, had a great year. This is 17. Everything went up in 2017, honestly. And then 18 was just nothing but sideways. 18 closed terribly. And then 19, we just kind of consolidated and went higher. So you can kind of see here, these are low, higher lows each time. So this is a good sign of a trend going up. XLI, I have a great feeling about it. BA has been performing fairly well under the circumstances of what happened with the two airline crashes, dealing with the government, all the stoppages of flying, the MAX 8 and 9s. It's been performing fairly well. It got hit definitely, but from that point it's just kind of been trading sideways and just waiting for this to be over and potentially to run higher. Next we have XLB. So this is something I really don't trade many of these stocks within these material sections. I did own Ecolabs for a while, and these are the people who create the paints, the different various products that the economy may use, and different services, the materials. There's nothing really. This is nothing really sexy in this. This is not the technology section or the communication section. So this is more like blah kind of section, materials, whatever. So we're going to look at XLB. Kind of performing a little blah, exactly. So these XLB and your your consumer staples are two industries that kind of just are blah. They kind of go with the market. They don't have the most drastic influx of volume unless there's hitting the 200 here. Again, this is on a weekly chart, hitting a high about the beginning of 18, end of 17, and just kind of selling off. That's due to the non-farm payroll numbers, and this is again the rates here. And again, just trading lots. This is still building. This is still considered a bullish trend. You have higher lows, boom, 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 and potentially could come down to the 21 here at $58, and potentially a great little buying opportunity. All right, we got 3 left. We have, this is the XLRE. These are your real estate companies. These are people who lease land, collect money from tenants and different various things. So a couple of biggest ones that you hear a lot is American Tower, Equinix. This is like the huge servers, data centers. They basically run all data centers. American Tower runs a lot of different various cell towers. So if I type it in there, right? ANT, boom. Again, kind of doing the same thing. This looks like a great buying opportunity, honestly. This is actually really interesting. This is something I would like to look at. This is going to be something that have potentially higher dividends. They're very held by a lot of institutions and so forth. So this is actually something I'm going to be adding to my chart here. We're going to be adding this over here to my little lovely, the ultimate watch list. And if you want access to this watch list, just let me know and I can figure out a way how to give that to the users. So, okay, American Tower. That's great. I like that, actually. I like this pattern. It's kind of coming up, it's coming back up. It's got a 95 cents dividend. Not bad at all for 200-ish stock. It's actually not bad at all. I like that. Okay, that's something we're going to be looking at and diving into more. And then, not second to last, is probably the highest flying section is XLK. XLK is going to be all the technology companies. Again, if you remember, this is about 23% of the S&P 500, so nearly a quarter. And these are your Microsofts, Apples, Visas, Intel, Cisco, Adobe, Salesforce, NVIDIA kind of companies. And these are the companies that a lot of people look in, day out. So we're going to look at XLK overall. Yeah, all-time highs, beautiful uptrend. Little overextension for me to buy any of this stuff, but if you look at we're going to look at the top 5 holdings. So we're going to look at Microsoft. Yeah, look at that. That's a pretty move there. Having a great quarter here, beating out Amazon for a great deal for the government to host a lot of stuff. This is pretty major here. Microsoft has been a lagger. So if you look at Microsoft overall, like these years of like even like after the recession, like you were looking at $30, like the high of $30 for like 4 years. And then once they got to the data center, changed some of the subscription services around, it's been off to the races. And the 21 has been a fantastic buying opportunity for this stock. So Microsoft, love this company, and it pays a dividend. So it's a technology company that pays a dividend. So same with Apple. This thing has also been flying very high. Like, these are huge moves. Like, it's just so highly momentum because it's just hugging this 5 moving average right here. That just means it's high momentum, a lot of velocity going higher. Again, this is why this is the leading section within the SP 500, and it's the largest. So that's why the SP 500 has been going higher, substantially higher. Last but not least, we have utilities. So this is XLU. This is going to be like your energy companies. Again, it's going to be the people who give you electricity, power to your houses, and things like that. So we're going to look at XLU, sorry. And this is kind of similar to what we just looked at with American Tower. Like, it's kind of coming off, rebounding, and looking to trade sideways and potentially going higher. So this kind of tells me I would need a little bit more volume to get into these companies and potentially to go higher, and see where it goes from there. Yeah, so that is basically my current market overview of the overall S&P 500 sectors within the S&P 500. Again, we're at all-time highs this week. It's been a fantastic run. I feel like into the holiday season it could slow down. Trading is going to go down. For a lot of people, are going to be on vacation, traveling. I feel like it could potentially go higher into Thanksgiving, kind of leveling off in December and seeing how more trade war updates with China, and we'll just go from there. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor. Catch you guys on the flip side.